Good day, everybody, and welcome you to our next In the Chair with Industry Leader podcast. I'm grateful to be here again with Thad Miller. Welcome again from DDSmatch and DVMmatch. And then today I'd like to connect you with David Burch with Huntington Bank as our special guest today. Welcome, David. Appreciate you being here, man.
Yeah, thanks for having me. I'm really excited.
Good deal. Well, go ahead and just take this opportunity to kind of introduce yourself to the audience and just tell us your story of what you've been doing in healthcare for looks like quite a while now.
Yeah, it's funny preparing for this morning. I actually started to jot down the dollars in loans that I have been engaged with since I started in the industry, which was 1997, when a small company was just getting started. And I do think that I have been part of, with teams and everything else over that period of time, $25 billion. It's no joke.
Yeah.
I ran the math this morning. That means when you look at it, it's probably close to $60 billion in applications and submissions to get to the approvals, to get to that point when you're funding a loan. So I started off as a business development officer in a real entrepreneurial business back almost 30 years ago now, 29 years ago. Grew that business really quickly, became a national sales manager, and then helped lead that business for a good period of time until I moved to Huntington Bank, where I am today. I came to Huntington 7 years ago, looking to help them start up their practice finance business. And we quickly grew that business from 100 million maybe to this year we'll probably do close to $1 billion in lending in that space. Only variation in that time, I have taken on other business banking responsibilities. So I helped lead a portion of the country of business banking at my previous employer, and I've done the same here at Huntington. And we focus in a lot on sales enablement, sales performance, top coaching, getting the best out of people. So that's been my passion, really, is helping people grow, helping people become better, and at the same time that's produced some pretty good results for us.
Awesome. Well, super grateful to have you here. And I think it's a really fun opportunity for the listeners of this podcast to kind of get a viewpoint from, they're a lot of times they're busy in their practices or their hospitals, right? And they're just kind of taking care of business and casually scanning some headlines here and there. I think your role at the bank now is you're in those meetings of really understanding where does the bank think things are heading? I guess bring us into the boardroom for a minute, and then I'll ask you to do the same. Of what is your view of what's going on? And I guess the title of this podcast today is the tumultuous times, the a lot of things going on at once. Mm-hmm. So give us a picture of what you guys are talking about.
Well, I'll tell you, I think it's a different picture depending on what boardroom you're in. So I can only give you my vantage point from being on the executive leadership group at Huntington, is we're coming from a real position of strength. So this isn't a marketing conversation, but it's just reality. You can look at any one of our quarterly statements. We have an incredibly strong base and foundation as a bank. And that came from decision-making 5 years ago, 10 years ago, 12 years ago, 15 years ago. It's a really, it's founded in the right amount of risk at the right time. So our organization has been very good at that. Our capital base is very strong. And so the last couple of years, even when things feel a little bit uneasy, we're growing our balance sheet. We are leaning forward on initiatives where other people tend to be holding back a little bit and maybe coming in reverse, backing up a tiny bit. We've been able to, because we made those really strong decisions over the last decade, it's just put us in a great spot. We're one of the few regional banks that's growing loans, growing deposits, quarter after quarter after quarter. And so that lets us make different types of decisions. We're going to be growing our practice finance business. We're launching a whole new branding campaign. So we're leaning in right now. So I think it depends a little bit on the boardroom you're in. And the other thing that our CEO says all the time is control what you can control. There are some things that we're not going to be able to maneuver and control, but when you control what you can control, you can make some great things happen. And that's what we're trying to do. Overall, I think we're in a good position because of those reasons.
Yeah, and if I can add to that, I mean, that's where dentistry and veterinary is such a great job to be in, because banks like you want to work with those professions, where there are plenty of sectors they don't want to work in those sectors. Give us a little, why do you want to work with dentists and veterinarians? That's my question, I guess.
Yeah, I think first it just comes from experience. There's very few people that have seen more deals, that have been through not only the economic crisis, but COVID. And when you have that type of experience, you recognize the strength in the profession. Even back in 08 and 09, when losses in some of the business banking portfolios were jumping up triple, quadruple, the healthcare, particularly dentist and vet sector, was not impacted as greatly. And so when you're building a business and you're building a portfolio, you want to have those really, really strong assets on the books. And it just comes from experience. It comes from watching transactions work, not work. And it is not, and what we try to do to that point is make it as easy as possible as we can for a dentist or a veterinarian to be able to acquire financing. I mean, we do startups very easily, acquisitions, 100% financing. And guess what? We recognize that doctor's going to come out with $200,000, $400,000 plus in student loan debt. It's just very natural for a bank that's specialized in this for so long. And when you have underwriting teams and people that just know the industry, that's what we know is coming. But we also know the result. We know what the final outcome is. And that's an incredibly strong portfolio with very, very low losses.
Yeah.
So,
and it's obviously you wouldn't continue to do that if these dentists and these veterinarians aren't succeeding in these new positions of ownership. I mean, because obviously the seller dentists and veterinarians we work with are like, how could a young dentist or vet, buy my hospital with all the debt they have from school or whatever, maybe how would they make it work? Well, obviously you're not going to give a loan that you don't think that's going to work. It needs to cash flow. Not all businesses are able to sell to everyone. We know that. And that's part of our role, is to make sure that, a buyer understands what they're getting working with our client, that we represent the seller. But I think, I'm just trying to just make sure these dentists and veterinarians know that there is hope out there. There is opportunity out there. And they're a professional. They've obviously, they may have loans of $200,000, $400,000, $500,000, but that isn't credit card debt. I mean, they have invested in a career that only dentists and veterinarians can do that career. So it's not like there's 1,000 people that are going to get dumped to compete with them in that area. It is a profession. Attorneys go to law school. It costs them money. Doctors go to medical school. It costs them money. Accountants have to get extra schooling to become an accountant to earn that extra amount of money. I think there's a bit of a smear campaign out there where, like, how could you consider owning your own practice with all this debt? And people start to feel guilty about it, like they went and bought a big boat or something like that. No, they invested in themselves. And one day when it's right and when it works, the bank says it's good and their advisors say it's good. We want the buyers we work with to have great counsel, good accountants, good attorneys, good bankers to work with to say that it's good for their future. It's just wonderful to have banking partners like you that recognize these sectors are great to work in, and for our sellers to know that they can actually get the loans so our clients can retire or move on to whatever they're doing next.
Yeah, I couldn't say this any more clearly. You should have zero reservation that you're going to be able to get a loan to have your practice purchased.
Yeah.
Zero reservations.
Yeah.
You talk about student loans. That's actually one of the biggest reasons, this is coming off of your point, as to why practices are so resilient. It is barriers to entry. I mean, you have to go to undergrad. Then you have to go to medical school, dental school, or vet school.
Right.
Then you got to go to residency in some points, right? So
Yeah.
you're talking about almost 10 years and a lot of investment. It's not like and nothing wrong with being an insurance agent, but if I want to sell insurance, within 30 to 60 days, I could start selling insurance.
Right.
I can go get licensed.
Right.
Nothing about that industry. It's a fantastic industry, but it doesn't take you 10 years to get there.
Right.
So the barriers to entry is one of the key pieces of the strength of the industry. Because for so long, the numbers weren't really moving. They've increased a bit, but it's that barriers to entry that really creates that success. What I'd also say is thoughtful advisors is what we look for. So that's why we enjoy our relationship with your company, DDS and DVMmatch, because what you want to do is you want to make sure that you're taking the right vet, putting it into the right practice. You could easily, where we have problems is when you take a dentist, let's say that in their associateship only has the hand speed to get to $600,000-$700,000 of production. But now they want to go buy a practice doing $1.5 million, a single dentist practice. So the dentist has to be able to do over $1 million or $1.2 million. We count on advisors like you, and I think you guys do a fantastic job of putting two pieces. That's actually your logo, actually.
Yeah.
Two pieces together that fit the right way.
Yeah.
So you have an industry that's extraordinarily resilient. During COVID, we believe in the industry so much that in March and April, when practices were closed, and we really didn't know all of the kind of future outcomes that were out there. Everyone was trying to figure things out in 2020.
Yeah.
We funded $30 million in loans in both months. Funded it to practices that weren't even open. They were closed. And we didn't really know what that future was. We just knew that if you were going to invest in a spot, that's the spot where you wanted to be. Yeah. It's just an incredibly resilient, both dentistry and veterinarian specialties are extraordinarily resilient.
Yeah.
So buyers should have and sellers should have complete confidence that there is a lender out there that will fit what you're looking for.
Yeah, it's so funny. I think you summed it up really nice between the two of you is, look, there's a barrier to entry. Not everybody can do this.
Right.
But it's a barrier to get into one of maybe the best small businesses in America that you control, you can influence, you can take great care of your team, you can take great care of your patients or your clients, and that kind of control and that kind of avenue is not exactly what you get in all the other industries. So really the confidence factor, let's hone in on that, because there is uncertainty right there. If you read enough headlines, you might start twitching a little bit, so some of these buyers though are looking at opportunities today. I guess just tell them, what have you done as the bank? What have you guys done differently in the last 12 months? If nothing, great, that will give them some confidence. And Thad, on your side as the sell side advisors, what additional tools or what additional asks have buyers been asking you as well? David, we'll start with you.
Trying to figure if we've actually done anything really different. The only thing we're doing right now is we're in the middle of doing a complete overview of our products to make sure that we're addressing the market the way we need to. Are our limits high enough? Are we lending enough money? Are we making the process easy enough to compete? So we haven't actually sat down and said, we want to cut back or we want to look at this differently. Because like I said earlier, we've had this business open for 7 years, and being the person responsible for running it, I know there's nothing more important than a strong portfolio. Strength in your portfolio equals longevity, period. The bank likes the strength in the asset. And so we've always managed our business, approving the right customers at the right time with the right partners. So we haven't really dialed anything back. I would say the thing I would think about if I own a practice today, or if I'm thinking about starting or buying, is be amazing at what you're trying to do. Thad mentioned this a little bit earlier, but it's about having the right people around you. Control the things that you can control. I tell my team sometimes, I say, our world isn't complicated. What is complicated is doing the simple things every day that we know create results. And it's the same thing for a practice owner. I mean, what about our economy is going to make a practice go upside down? You may have some margin compression because maybe some of the stuff you're buying, some of the supplies are maybe coming from places that are going to have tariffs. I think a lot of our suppliers are kind of American grown, but I don't know the exact percentage. So let's say your supply margin goes from 7 to 8. Is that going to really change your world? Or are you analyzing your pricing structure? Are you making sure that you have your kind of normal increases for your fees? Are you managing your staff to have really, really strong case acceptance? Because that's what's important to your clients, they get the right treatment. It's also incredibly important to your business. Those are things that you are well within your control. Instead of worrying about the next up and down tariff, focus on your business, focus on the things where you can make an impact. Because there's so many of them in there.
Really, for sure. Yeah. You know, our role representing the seller is to give transparency. That builds confidence. It gives direction. And we always talk about, we want to work on the transaction to a point where everybody understands what they're getting, seller, what they're getting, what the buyer is getting in the practice. But at some point, we need to move on to the transition. Like, we need to move past the transaction, get everything agreed upon, and then focus on how it's going to play out well for the buyer who's buying it. They're bringing on new staff that they don't know. They're marketing in the market. They're connecting with the specialist in the market, whatever it may be. So that transparency is critical for us to give to the buyer from the seller, and that's a third-party business valuation that helps in the financing process, the clinical opportunity blueprint, or in the vet, it's the hospital opportunity blueprint showing where is the revenue coming from. So if that young professional who's been working 5 years in a clinic or, as an associate or something like that, if they can't keep up, maybe they need to look for other opportunities. Or if they've, I think the young dentists and veterinarians are better trained now than ever because of all the, the schools do a great job, but also the additional CE that's out there to learn how to do dental implants or advanced surgeries or whatever it may be, with technology that's at their fingertips to do more procedures than maybe the retiring dentist or veterinarian who's chosen not to do that because they're treating the patients they want. They're sending out most everything. So, most of the young buyers I work with have a broader skill set than the sellers that I have. So when they come in there, they can add that to the practice. The patients don't want to go anywhere else. They want to work with that clinician. And what we want to do is show that to them ahead of time, like, hey, this could be yours if you choose to do it, or you can send it out just like the selling professional does. So transparency is critical for us, and the more we can bring, if it's real estate value, if it's value of the practice, value of the assets that are in there, they need to know that. It can't be something on a 3-page piece of paper and you kind of buy it and hope that it's there. We want to really show it, not just say it.
I think if you hear what he's saying there, right? A lot of that is about control what you could control.
Yeah.
Like you can look, you could say, this practice is referring out $120,000 of endodontic work. And this doctor, the associate doctor, happens to be someone who can do that, can really reel it. That changes the financial makeup of a practice the first month you're there. Because instead of referring out $10,000, $15,000, you're going to do that yourself, which guess what? Your patients like that much, much more, right? They want to be treated right there on the spot. They want to relieve pain. They want to know the person that's doing it. So that's a controllable, like you can control that. And I think, again, good advisors will bring that to you, particularly in an acquisition. I mean, it's because in an acquisition, you can really see it really quickly. Like you're as the selling doctor might be doing too much hygiene himself, which is, we know that's a problem, right? So you could see that, you can change that. Referring out, you can change that. So I think it's a control the things you can control.
So if I'm hearing you guys correctly, nothing has changed with the tariff, the new tax package that just got passed, all of the comings and goings of thus far 2025. Nothing from a buyer perspective has changed. Basically, your organizations have said, hey, this is not normal, but hey, we're having some uncertainty, but it's not changing the game in earnest. Is that fair?
Well, I mean, obviously we can't tell the future by any means, but what he's saying and what I'm saying is, I've been in this business for, I've been in the dental industry for 28 years and been through recessions and changes and presidents and whatever it may be. But, you've got the stats. I mean, maybe you could talk about that. I mean, you do a survey that's a very broad scope and year after year, and then you're going to show that in this process, but maybe touch on that. I mean, you're the one doing the data. You're the data guy.
Yeah. So we published some industry data, and it's been exciting, especially specifically on the dental side, to watch that stair step of every year of what is the productivity, what is the outcome, and how many years do you guys think over the last 25 has there been a down year in dental? Well, there was one year called 2008, 2009 when I came out of college, and anyway, that was fun finding a job at 40% unemployment up in my hometown. But all that to say is that was one of those years. We've really only had one other in 25 years of not stair stepping up. And quite honestly, if you look at the compounded annual growth rate over that time, it's well above inflation. So talk about a stunning small business that really has weathered some significant bumps in the road. So let's think about that real quick and unwrap that. So if you were an owner, right, and you were saying, okay, maybe there is going to be a soft spot. We don't know. I mean, economic forecasting so far has been fairly resilient, but let's talk about, let's control what they can control. So what are some of the things they should be thinking about just tactically? As you kind of said, you guys are operating off a position of strength at the bank. How should they start, thinking about and planning for the uncertainty of life?
Yeah. Well, first, I'll just back up to say that organizationally, we're thinking a lot about the tariffs. It doesn't impact our healthcare business as much, and we really haven't modified our position there. I think we do a great job as a bank of reaching out to our customers. So we have advisory boards. We'll get 20 or 30 business owners on the phone for a couple hours and let them share their experiences. And certainly the tariffs have impacted a lot of different types of businesses. If you are heavy in the trade and if you have a lot of foreign supplies coming in, there is a bit of hesitancy there. So, and that can impact somewhat, our industry as well. If there's a less hire, we saw the jobs reports tweaked a little bit over the last few months where those came down a little bit. So certainly there's a trickle effect of that. So I want to make sure that we know that the listeners know that we are focused on that more globally for our business. I think if I'm in a dental practice today or a veterinary practice today, and if I have lots and lots of friends that own practices, and we'll sit down and talk on a Saturday or a Friday, and what are you thinking about? What is your plan? I think the challenge most times is there is no plan. Yeah. How are you going to grow your practice by 10% this year? Strategically, what are the 3 things that you're going to do to make that happen? And I don't think all the time that that's how our clients are thinking about. I know there's lots that do, but I think that's a pretty big gap. So I would just be sitting down, find some advisors, find people. I have a great friend who's a dentist in Columbus, Ohio. I've known him since he's been a young guy. And he is inquisitive. He wants to go meet with other people that are doing great things. He wants to go meet with practice owners that have 2 and 3 practices that are all growing. And he wants to be inquisitive. And then from there, he creates a strategy for himself. These are the few things that I'm going to work on. You can talk to someone like myself, talk to someone like Thad. I'd give anybody a lunch or an afternoon conversation for 30, 40 minutes if they're interested, and just kind of ask some questions back and forth. So I would say if there's one thing that I would tell somebody in this environment right now, I would ask that question. Do you have a plan? What is your strategy? You own $1 million, $2 million, $3 million business. Do you have a growth strategy? What are the 3 things you're going to do to execute that growth strategy? And if you don't, we should start today. because you can always start right now. If you don't have one yesterday, you can get one today. And you can start planning today. So
No doubt.
does that make sense? Did I connect that the right way?
It does, yeah. I mean, to kind of distill this is like, I don't think maybe 10 years ago you could be a passive owner. You know what I mean? You could work hard, you could do your day job, you could pay the bills on a Friday. But I think what we found with, you know, some new influences in the market that may not have been there in force 20 years ago, whether in vet or dental, is corporate and these more sophisticated business owners that own and run a business. Well, I do think that we need to level up a bit, right, on the private side, and just thinking about what am I differing, my competition, right? What am I doing special? And then two, am I actively engaged in the running of my business and a student of it, and a student of what I should be doing and what I, you know, reactively do. Those are very different things. Like you said, to begin with the end in mind, it takes a plan and a strategy. And it might take a financial document updated more than once at tax time, right?
Right.
You need that dashboard, you need your practice management dashboard, and combining those two together, you find the really successful ones, right? That you get to take to the finish line, and you get to sell something that is really exciting and fun. Right?
Yeah, I mean, the seller who is more prepared. I mean, it's but I mean, even the seller that is continually applying their foot to the pedal. They don't have to be going 90 miles an hour. They just have to be going forward. And there's no cruise control in dentistry or in vets, because the minute they take their foot off the pedal, they're going to slow down. And again, it's obviously a rewarding profession, but it's still a profession, and you have to be professional about it and do certain things. And if you don't know how to do it, you know, there are plenty of people in both of these industries that are there to help, that work with dentists or vets and help them. So they have tribal knowledge on who does it well, and let's use tips from there. But I think that's a key component, because the professional that's been going steady, they don't, like I said, they don't have to be racing up until closing. It's just so much easier to find the right person for their future, you know, for their practice to be sold to. It's so much easier, and they're happier. Everybody's happier. There's no doubt.
Yeah, I think connecting back to you mentioned the corporate dentistry.
Yeah.
I think a really, really key connector here is staffing. So if you think about, and tell me if I'm wrong on this, but if there's one metric that has changed fairly significantly since 2020 is the cost of your staff. So hygiene costs have gone up, dental assistant costs have gone up. And what's happening there is, if you think about a DSO or a vet group practice, corporate, either side of that,
right,
they have a team of 5 people trying to figure out how they can hire 100 people that month. Right? Think about that. There's a dentist, she's sitting in her practice, she's doing that by herself, or he's doing that by himself. So I do think we have to be, there are influences like that. Like, if you're not, 20 years ago, there was no competition there. None. You didn't have a $400 million dental company with an HR staff of 20 and recruiters at every trade show influencing you that way. So I think you have to, how are you thinking about that? How are you planning for that? Maybe you work with some of your other folks in town or connect to different things to try to bring in more people. But I think that's a really interesting influence from corporate, and just one of them that we have to be thinking about. And there's others like that as well, is how do you approach that? And how are you preparing for those moments?
Yeah, that's a great point. And you're right, staffing is a critical piece. And you know, at the dawn of people wanting to work hybrid, or people wanting to work at home, you know, these jobs are not hybrid jobs or work from home jobs. So there are people leaving the industry because they don't want to be in an office 8 to 5 or whatever it may be. But I do feel like, you know, if you can provide a really healthy, good environment for your employees, there's no reason you shouldn't retain them, as long as you're working on your being professional.
Yeah, and I think in many cases they want to be in that practice.
Mm-hmm.
They want to be with Dr. Judy Smith, who owns the business, has for 10 years, and that's my person. They love that. They love that part of it. And we have to be working on trying to motivate that and to make that connection for the folks that are searching.
Right. Private's superpower is that they're private. As the owner, you get to dictate the culture. Culture is not infused from above. You get to dictate how you attract people, how you pursue people, how you find the best talent. But all these things come at a cost, and they take intentionality and planning and a cohesive strategy to be able to effectuate it. Yeah. Passive ownership is a lot different than it used to be.
Great.
And it doesn't work like it used to.
For sure.
Because I think we have a practice in the Southeast that started a few, bought a few, and this doctor will take a practice that's doing $50,000 a month in revenue, and within 3 months it's doing $80,000. So you're either doing that or you're not, right? Because that $30,000 in dentistry or veterinary services is coming from somebody else's practice, right? So you're either, and this doctor has a great strategy and has a really palpable growth mindset, and he's working towards that. So same situation, right? He's controlling that. And if you're not going to do that, then somebody's going to do it. And so I think 20 years ago, you could have grown 10, 15, 20% a year just by being open. I don't know that that's the same case today.
No, I don't think so either. I think you have to, and again, it doesn't, when somebody hears this, like, oh, I don't want to do that. In my business, there are things I don't do. I hire people to do them because I'm not good at it. I focus on my unique ability in my business. And I encourage dentists and veterinarians to do that and hire people to help them. They got to look at the cost, obviously, but it's offset by, being active professionals in their industry.
Yeah. Well, I look at the horizon, and I think 2025 has been an interesting ride thus far. I don't think we're done yet. So I guess moving forward, any parting thoughts to listeners, whether a seller that is thinking about, is this a good time to sell? Or even a buyer that's on the edge, whether a vet that maybe is kind of comfortable in their corporate but really yearns to own, or a dentist in the same buyer scenario. I guess talk to both of those as a parting thoughts as we look into the horizon without complete understanding where all this is going. But I guess talk to them personally just for a minute.
Yeah, I think the thing is for the seller, the potential seller, I think they still need to focus on their relationships with their staff, with their patients, but they have to obviously still run it as a business. They have to run that business. They have to keep their foot on the pedal to get what they want. As far as the young, interested buyers, a lot of times people that are an employee think they have control, but they don't. You have more control if you're an owner, because you're in control. If you're concerned about what's going to happen in the economy or whatever it may be, it just takes a second for them to eliminate your position. But if you're in control as the owner, you're driving the boat. Yeah, there's more risk, but there's more reward, and there's actually more security being an owner.
Yeah, I would, I think in my history, I've seen like 2 times when the market really went down. And you'll have, it's like, remember in 08, 09, like everyone just pulled their practices off the market pretty much because people's savings and investments went from $2 million to $700,000 in a week. And so there was a lot of question around that. So, and I think from that, our physicians are even better prepared today, the dentists and vets that we work with, because their advisors have prepared them certain ways. So I think look inside first. If you've got a really good financial path, only you know that. It's the same way with myself and my wife, right? We know what our financial position is. We know what our life is like. I'm the only one, and my wife and I are the only people that can say, I'm in a good spot. I can go do something else. So have a checkup there. Sit down, go through your finances, make sure you feel really good about where you are. The market's had a little bit ups and downs, but if you look at it, it's still done well. It's not, we're still at a pretty peak moment right now. So I think if you feel good and secure personally, it could be the right moment to do that, right? And it's not like you have to go anywhere. Most of these buyers would love, in many cases, the seller to stick around for a period.
Absolutely.
I mean,
Absolutely.
you can go from being an owner to being a mentor, the guy in the practice everybody wants to go talk to, and work for a couple years, 4 or 5 even, right? I think it's a personal thing. And I would do that checkup first if you haven't. Like a really, really good financial with your wealth advisor. Do a really, really good financial checkup. And if you feel good and your partner feels good, then you can start making some decisions about what's next. And a conversation costs nothing. Thad or any one of his folks across the country, how many DES matches you have now?
63 people out.
63, all and almost it operates every state, including Hawaii, Alaska. Just go find somebody, sit down and just have a conversation. Conversations cost nothing. Build your intellectual capital around what's up next, what's possible. So then you can then take that information and go back to your partner. And if you don't have a partner, you go back to your friends and family and you sit down and you talk about it. Getting prepared that way. I think sometimes people feel like if I go talk to a banker, then they're going to make me do a loan. And I don't.
Right.
Yeah. Just because you go talk to someone at DVMmatch doesn't mean you're going to walk out the door selling your practice the next day. It just means you are going to get access to information. At Huntington, we call it advice and guidance. So we're one of the tops in the country as a bank as far as trust. People really trust our organization. We've been on a path the last 6 or 7 years to be the #1 in advice and guidance, because we actually weren't. Strangely enough, we were extraordinarily highly trusted, but we weren't resonating from an advice and guidance perspective. So we've been on a journey the last 5, 6 years to be really good. We just won an award this year, beginning of this year, for #1 in advice and guidance. So that's what DDS and DVMmatch can deliver. That's what a bank like ours that has high levels of specialization can deliver to you. And there's others out there, not just me, that have this high level of specialization. You want to talk to someone who's done it, not just a couple of times, but has done it hundreds of times, thousands of times. Like I said, when we got started, I have literally been a part of $25 billion in lending. That's thousands and thousands of practices. That's the person you want to get a free cup of coffee with. Sit down and have breakfast, have a conversation, ask questions. What's up next? What have you seen? Talk to someone like Thad. Talk to someone in your company, Bluent Company, right? What have you seen other people do? So I would say check yourself first personally. Where are you at? How does your family feel about where you're at? Are you comfortable? Then go out and start to gather information. Information is free. This podcast is free.
Right.
There's other places you can go. There's other that you've had here that can probably answer some of those questions. Gather it up. Get as much as you can. Be inquisitive. Ask questions. And then from there, you can start to put together a timeline.
That's great advice. Absolutely.
Well, thank you, Thad. Thank you, David, for being that education piece that really the whole purpose of why we're here today is owners, buyers, professionals in these industries that are, again, one of the greatest small businesses in the US of A. They do better when they have a full deck of cards. And I feel like we did a good job of walking through the uncertainty and then some of the tactical things that some of the owners and buyers can be thinking about as they approach. But in any time, education and knowledge will help compel you to the right decision for you. So guys, I do want to give you guys an opportunity just to kind of give our audience an opportunity to understand how to reach out to both your organizations if they want to learn more and get educated like we talked about today.
Well, Huntington Bank is right now, I think, $209 billion bank. Our footprint goes throughout the Midwest, Ohio, Michigan, Indiana, Illinois, Wisconsin, Minnesota, Colorado, West Virginia, Pennsylvania. We also now are in Texas and we're in the Carolinas. But our healthcare business is a national business. My suggestion to you is have conversations with people who have experience. Have conversations. There's other banks out there that have experience. But we're going to give you some details here of an outreach that you can make into Huntington and that we can direct you to one of our, I think we have 28 colleagues across the country. So we operate in every part of the continental United States. We have folks in California and Washington, all throughout the Midwest, Texas, Alabama, Oklahoma, Florida, the Carolinas. So we have colleagues that are in market all over the country that would just love to engage and deliver advice and guidance that can help you. Whether or not we do the loan, it's making the impact in the community, making people's lives better, helping businesses thrive. That's really our driver. At the end of that day, if we fit together and we can do a loan together, that would be even better. But the contact information will be provided, and you can reach out and we'll make that connection for you.
Thad Miller, I founded DDSmatch and DVMmatch, and our goal is to work with clients at the stage in their career where they're wanting to transition to someone else. We obviously have a robust website where young dentists and young veterinarians can go look for opportunities across the country. We are DDSmatch.com and DVMmatch.com. I would just go to those representative websites and create a profile. There's no charge. We never charge buyers. And again, our job is to provide transparency, provide opportunities to work through the transitions to find a good match for their future.
Awesome. Thank you, guys.
Okay.
And to all of our listeners, Blue & Company is a top 60 CPA firm, and we really do work kind of like Huntington nationally on the healthcare side. Specifically, we spend a lot of time in dental and vet, and we really enjoy helping clients, whether that's a business valuation, whether that's tax advisory and oversight, whether that's buyer representation. We really work basically from start to finish with all of our value clients across the United States. Thank you guys for taking time out of your schedule to do that for our listeners.
Yep.
Thanks for having us, man. Really appreciate it.
Yeah.